Alright guys, so today I'm going to be revealing my strategy right now. So there's two time frames I use when it comes to charting. So when it comes to charting, I use the 4-hour time frame and I use the 30-minute time frame. So the 4-hour and the 30-minute. Now you may ask, why do I use these time frames? These are the best time frames for my strategy. I've tested them all. I've tested the 1 hour, the 15-minute, all of that, right? So 30-minute, 4-hour are the best. Now you can use either of them or you could use them both. So I'm going to show you how I use them, but you could really just use just the 4-hour or just the 30-minute. So how I use it is I'll go down here and say, all right, I would be looking for like some bounces here, right? So we can see that today we bounced here, but why did we bounce here? Because everything in the market happens for a reason. So we actually have an equal low right here. So here's a low, here's another low, but what do we notice? They're the exact same low, right? Exactly. Exact same low. So what do is we go back and I create a zone right here. Now, if you use TradingView, very simple. You can just go over to here. It'll look like a little paintbrush. And you hit geometric shapes, rectangle. You can move this all around. Also, a little helpful TradingView tip. If you click on the gear grinder right here, hit settings, hit extend. You could check both these boxes, hit OK, and it'll extend it all the way back for you. It does not do that default. So it's a good thing to have. So what I notice is obviously we had these equal lows. So even if I just did right there, right? And I go back and you go back in time and it doesn't really matter how far back you go realistically. But we can see, okay, we've gotten a lot of bounces in this area. But I think a 30-minute time frame would be a little bit more clear. So what I would do is I would go to a 30-minute time frame here. And what do you know, right? This is, I believe, today. Yeah, this is today. So what I see is we came down to this area, we bounced like crazy. We came down pretty hard, we bounced right back up, right? So what I would probably do is try to make sure I can include a good amount of these bounces. So I look for typically, just a good rule of thumb, about 3 to 5 bounces or rejections. So 3 to 5 bounces for the demand and 3 to 5 rejections for the supply. Now, the reason why, before we dive any deeper, the reason why this strategy works is because this is what all the big banks and all the big institutions do. So they have unfilled buy orders sitting in these areas. That way, every time they drop it into this area, like for instance, this one right here came down super hard, boom, bought it right up, right? Today, we had a crazy gap up, crazy bounce, boom, came down pretty hard. What do? We get that bounce. Came down again, makes a higher low, and then boom, the thing was gone. You can see this thing take off like crazy, right? So it respects this area really well. And I would say, I don't know for sure, let's take a look back here. So just not today, and I think it was like last Friday. Let's go farther back and see how often these areas get respected. So if we go farther back here, I mean, we can see that these areas have been respected for quite a while at this point. I mean, like same thing here. If we move it up a little bit, came down, got a bounce, came down, got a bounce, right? We broke through, retested, gone. Dumped, pumped. You know what I'm saying? So these areas have been good. So the thing is, when it comes to trading, history often repeats itself. And that's why these strategies work. We're going based off of past tense price action. And what I look for is for it to make the same move again, right? Because it's going to repeat itself. So if it bounced here once, more than likely it's going to bounce here again. So again, all I do is I just look for where are most of the bounces happening and I make a zone. So like right here, this was our low. This is the lowest point I saw us bounce at, and it also makes an equal low right here. Right here to pretty much here is pretty close, right? So what I do is grab that and then go to the bounces here. I could actually go up even a little bit higher if I wanted to. But I think I'm going to avoid that and try to just catch these bottom wicks right there. See how it kind of curves out? I think that's what I'm going to try to go for more of. Okay. And then that's how you have your demand. And then if you go on a smaller time frame, you can see how you basically, I'm going to expand this just a little bit. This is how you could have caught the trades. I mean, we opened in this demand zone, we got a pop. We came back down to the demand zone, got a pop. Came back again, higher low, it got a pop, right? Now, you want to go find the supply, because one of the biggest things about my strategy is playing the supply and demand. So, you can see here that where do we go from here, right? We're going to need at some point somewhere for us to reject that. Price will not just continue to go up forever, the same way it won't continue to just go down forever. So right here, I honestly don't see anything. There's nothing that I really see here that tells me, oh, I really, would like downside once it hits this area. So what do? I'm going to go back, and this green line tells me where we are currently at right here, which is 577.22. And where do we start to have some rejections at? It doesn't seem like it's really around here. It seems like, I'm going to check on the 30-minute too, just so I'm 100% on this. Let's see. Make my chart a little bit bigger there. So 577.22. So yeah, if we look actually, you can see we've got a rejection here and quite a bit throughout here, right? So if we make this zone there, let's look there. Yeah, let's look at this. So zoom in here. You can see, we've gotten the rejection nicely off of here before. We've rejected there. We've dumped through there, rejected here. And we used to reject from this area quite a bit. And then it turned into a demand over time, which that's kind of how that works, is demand and supplies, they flip. So whenever it is no longer a supply, it typically gets retested and turns into a demand. So for something like this right here, I would be watching for the rejections. It's not the cleanest, to be honest. But if we go on a 4-hour, let's see if it looks any cleaner. So we did have that initial rejection right there, where it wicked down and we came down. What about over here? And this is all you do, is you just kind of go through the different time frames and say, okay, is there enough rejections here to really classify this as a supply or a demand, whatever it might be, right, that you're looking for. So for here, I wouldn't say this is my favorite, but you can definitely see some rejections here. So in the meantime, we don't really have much as far as a supply zone, like a real good one, until we probably hit about, I'd probably say about 580-ish to 582. That's where you really start to see this thing probably reject. So there's two approaches you could do to that. You could not look for a rejection until that point, or you could try to find something a little bit earlier. I usually try to find something a little bit earlier. If there is something there, which I do believe there's something here. It just might be a little bit harder. And you might just want to be a little bit more careful, not wanting to get in too early, and make sure, you wait for the right candle closes before you get into a trade, obviously looking for a rejection, and make sure you obviously see the rejection. So coming back to the current price action, this is pretty much how I would set this up for a normal day. So tomorrow, let's just say, if I was to chart it up, we have this supply already. But if I was to chart it up for the demand, how I would look at it is, okay, this is where we bounce at the most right now, where we're currently at. And we also did fill this upside gap. So I'm going to go from the gap down a little bit there. Have this be my demand. And I don't know, as of right now, I don't know exactly, how good this will be. And we'll have to kind of just look. So we'll go back on the 30-minute time frame, see, do we often bounce here? And it looks like the answer is yes. So we came up, we bounced, retested higher. We came up, we bounced, obviously retested and went higher. And it also used to be a supply. So like I was telling you guys, the supplies often turn into demands and vice versa. And that means they're pretty good. So I'm gonna go over here to our current price action. And this is kind of how I would approach it. So just kind of having my area set up and ready to go. And then kind of watching for these rejections or bounces on the lower time frame here. So I'll move this down a little bit, have a little bit more room. And this is kind of what I would look for. And kind of just look to trade it in between, or not in between the zones, through the zones. So wait for it to get a rejection and maybe look for puts. And wait for it to potentially get a bounce and maybe look for calls. So that's kind of what I would be looking for here, and breaking the strategy down, I would say as simple as I possibly could. Do we have any questions for that? I thought I thought it was only if it's a drastic move upwards then you can use it. Yeah, you typically want to look for good moves. You typically want to look for, obviously, good moves. So you want to look for, obviously, good moves, not like little small tiny bounces. You want to look for good actual bounces. I don't understand how you got the main zone from today, because not all the moves in that demand zone were drastic. Well, this one, this demand, it was, I mean, they were pretty big moves, actually. If you go back and you make this demand real quick, I would say all these moves are pretty big moves. I mean, this one right here, 564 to 566, $2 move. 565 to 569, that's a $3 to $4 move. 564 all the way to 569, about another $5 move. So these are pretty drastic moves. I mean, I don't know what you consider crazy moves, but these are, I mean, really all you need as far as good moves, obviously. So this is all you do to trade. This is one of my main strategies, one of the biggest things I use. There are some other things I look at, but this is one of this is probably the foundation of my strategy right here. This is the foundation of it, and one of the things I commonly use, to catch really good trades. Why? We're just simply going over charts right now, guys. Simply just going over charts right now. We're just talking charting. That's a good question. So why? So there's only 3 stocks I trade, and why one over the other? Typically, I am looking to see whatever one is moving the best that day. So if Qs are moving better than SPY, I'm going to look to trade QQQ. If SPY is moving better than QQQ, I'll look to trade SPY, right? Whatever is moving the best that day is what I'll look for. Now, something else you guys can kind of do. So another part of my strategy here is you can go ahead and have order blocks. So you can find these areas of these down wicks to look for upsides or retracements. It's another thing I use. Also, I mean, supplies too. If you're going to look for a supply order block, you can kind of look for an area of rejections where we wick up to a lot. And then look for it to get that rejection there, kind of like this. Only thing with order blocks is you're doing them on a lower time frame, so they are a little bit more risky. When you're looking at something on a bigger time frame, they typically get the move. On a smaller time frame, it's kind of what it is. So, what other questions do we have here? Why are we only talking charting? Because that is the topic for tonight. That is tonight's topic. So. But yeah, if you guys have any questions, be happy to answer them. I never have a daily bias. I come into every day with the same thing, which is just a clear mind and ready to make some money. You know, I never have a bias of, oh, I really hope it goes down tomorrow, or I really hope it goes up tomorrow. I really don't care at the end of the day. You know, if it comes down, I can make money on puts. If it comes up, I can make some money on calls. I really don't care, right? As long as we are not chopping, and we're not, you know, having a choppy market, I'm good with that. So what if it was respecting support, so you go and then it just tanks down? I mean, well, then it's in, there's a lot of things. I mean, that happens, right? I wish the strategy was a 100% win rate. It's not the case. Sometimes, you know, you either enter too early. Like this happens to me. Sometimes I enter the trade a little too early and it ends up stopping me out and then doing exactly what I wanted it to do. Sometimes, I mean, I had my zone misplaced. And sometimes I'm just straight up wrong, right? And that happens. I mean, it's called trading at the end of the day. You can't win every trade, and that's why risk management is super, super important. So there's that. When you were showing the chart, how do you determine if it's a demand zone or a supply zone? That's literally what I went over for the last 20 minutes. When there is a drastic red candle in that zone also, you're looking for mainly bounces is what you're looking for. Mainly bounces. You can forget about everything else. Like, yes, there is a decent red downside candle there, but ultimately we ended up bouncing. So it doesn't really matter, right? Ultimately, you want to see the bounces out of the area. The end result is what you're looking for. Thank you guys for watching the video. Make sure to subscribe and like and comment if you have not already. And make sure also to follow my, my new Instagram. Thank you guys for watching. See you later.